Good morning, everybody, and welcome to the Australian Market Preview for Wednesday, 2nd December. My name is Carl Capalua. I'm the market analyst over here at ThinkMarkets, and it is a pleasure to be with you as we kick off a month, what looks to be, so far, a pretty risk-on month. Before we talk about all of the key events from the last 24 hours and look ahead to the next 24, let's talk about the ThinkMarkets Difference, which is substantial. $8 flat rate trades, your own holder identification number, and unlimited phone support. 3 fantastic reasons why you should choose us for your next ASX share trade. Okay, the agenda for today, look, I've given it away. We're going to check out everything that's happened in markets. We'll have a look at some charts. We'll bring it closer to home and have a look at some ASX company news, dividends, and broker moves, and then we'll check out the macroeconomic data. Okay, kicking off with the Aussie market from yesterday's trade. We won't spend long because you know what's happened. We're up about 1% and pretty straightforward, up about 1% almost across the board. Gold, the best performer there, perhaps predicting a big jump in gold prices overnight. We'll see that on the next slide. Good to see down the bottom the volatility index for Australia dropping 8%. That's telling you investors feeling a little bit calmer about the global situation and then what's going on at home. Looking at the Asian markets, we can see some nice gains through Asia, also followed through in the US and Europe. Often we find that these things are a snapback from what was happening at the end of the previous month. So I wouldn't get too excited about some of these moves. We saw a pretty lousy end to November, if I say myself. So often that selling gets reversed out in the first day of the month for whatever reason. It just happens. Base metals prices generally high, just steel and zinc missing out, but some good gains there. And gold, without a doubt, the star up 2%, silver up 6%, but a nice performance from iron ore too, up nearly 2% in Shanghai trading this morning. Missing out was oil and natural gas, but they have had a fantastic run recently, so a little bit of a pullback there. The Australian dollar snapping back from early losses to close up about 0.4% as we saw a rather sharp fall in the US dollar index, now taking out a pretty key support level there. So definitely trending down the US dollar, which would provide general support for the Australian dollar, and possibly also we saw that support coming through for the gold price. And again, a snap back from the themes that were driving gold and silver towards the end of November. Again, new month, it's amazing how quickly things can change. Bond yields spiking, and that concerns me a little bit because that isn't great for gold necessarily. It's not great for, tech stocks, et cetera, growth story. And so there's a disconnect between some of the themes we saw driving certain markets at the end of last month and then into this month. What would be interesting, and a nice segue into the charts we're about to look at, is how we respond over really the next few days once this initial readjustment for the new month has completed. But looking pretty good on the S&P 500. If there's something that disturbs me a little, it's the fact that it didn't close near those highs. It closed around about mid-session. If anything, maybe a little bit closer to the lows and the highs. So that's not telling me that the demand that's coming in is confident of continued high prices, and therefore that demand continues its buying into the close. No, there was actually some supply in there potentially taking advantage of those higher prices and some of this, front of month flow. But overall, still pretty happy that the short-term trend is up. It's well established, as is the long-term trend, and the path of least resistance for me, at least in the medium term, is higher. So a long bias there maintained, as it is on the NASDAQ. Now, this one looks a little bit better because it's a bit more progressed in its break through those previous highs. However, I do note also it didn't close near those highs, and that's disappointing. Not the end of the world. Overall trends are still very much intact, but we want to see high closes on the session to indicate that further gains are ahead. So slightly cautious in the very, very short term, but overall the picture remains intact for the bull case. Having a look at the ASX 200 and how it traded, or these are our futures at least, how they traded overnight in response to those bullish moves from around the globe. Not too bad. We like to see the overall shape there in uptrend, indicating that demand was greater than supply throughout the session. We typically like to see a very high close. We've talked about the importance of that. And we got one. It's not too bad, but that probably indicates a little bit of trepidation perhaps for the local market just towards the close of that session. But we're still indicating about a 0.5% gain when we open this morning. Having a look at the ASX 200 chart, this is the cash chart, not the futures chart. We're looking to potentially bounce off this 64.71 level, which I have identified in the past. If we can see a nice bounce, we probably won't get down here. Looking upstairs, we're going to have a little bit of a resistance here, and then there is a small pressure point at 68.97, but then fairly clear into that 71.97 level. So until we can, I guess, get above 67.14, and as long as we're holding 64.71, we are officially in this little mini trading range here. I'd be happy to put a little bit of cash to work here. I'd prefer if we were doing it in this zone here. So if we were doing it in this zone here with a nice signal at this, because these moving averages will increase by then, at this short-term dynamic support zone, that would be ideal. Doing it a little higher is not bad at all. That's okay. Let's just see how we go today. If we can get a nice bar that looks like this, closing very strongly, it does really, I believe, then confirm this as the trough, and then it rules this out a little, and then we can really start to allocate capital for this next phase into potentially the all-time highs. Okay, so today's price action, I think, is actually very, very important for the local market. That's what I want to see. Otherwise, we may still, if this is scenario 1 and this is scenario 2, we may still see scenario 2. Okay, stock news. Not a lot of stock news out there. Not to say that this one wasn't important, but Piedmont Lithium is a rather small cap stock. They just announced that they have flicked the switch, green-lighted a definitive feasibility study for a spodumene concentrator. What the hell is that, spodumene concentrator? So spodumene is one of the potential raw inputs to produce lithium hydroxide, which is what they use in electric vehicle batteries. So this company made the news not that long ago when it announced an offtake agreement for that production to Tesla, none other than Tesla. So these guys have a rather large lithium deposit, to be fair, in North Carolina, which is not far away from the gigafactory over there. They are expecting to be in production in sort of mid-22, and then they have a huge pile of lithium hydroxide, spodumene / lithium hydroxide they can produce. So a very interesting little company. It's still early days, as we can see here, though. There's no concentrator there yet, hence the feasibility study, and they also have a DFS slated for Q1 21. So a long way to go in terms of actually producing spodumene, but one to keep an eye on. This was the Tesla announcement through here. It's pulled back nicely into this dynamic short-term support zone, and it's holding above there pretty well. Got a little flag pattern here, and I'd like to think if it could break through the top of this pattern here, I think it's probably going higher. So I think it's a very speculative buy. Make no mistake, this is not one you would throw the whole super fund on, but it might be one of those little bottom draw stocks, because if it can execute on its rather grand plans, let's say, it could be very, very interesting indeed. Certainly worth more than the 40 cents it is now. So keep an eye on Piedmont Lithium, ticker code PLL. Dividends coming up. We've got a few tomorrow, then a few next week, I would suggest, but press pause and have a look to see if your stock's in there. Very quiet morning so far on broker moves, but we do have Citigroup increasing their price target for retailer, the jeweler Lovisa. They did retain their neutral rating because of the expected continuing impact on COVID on their European sales, but noted that this acquisition that they're betting down of Beeline will be a positive in the short term. So a small bump up in the share price for them. Bank of Canada retained a neutral rating on Rio Tinto. Yesterday, the Reserve Bank was pretty circumspect with their assessment of what's going on in the world. They did note that the local economy is improving, but with things going on outside of Australia, there is still reason to be cautious. They obviously didn't change interest rates. They cut interest rates last month, so that nobody was expecting them to do anything this month. But they did say that bond purchases have started. That is their quantitative easing program, and everything, as far as they're concerned, remains on track. And the markets are well supplied with capital. So they continue to monitor the situation. They did say that they don't expect inflation to be anywhere near their target zone for a considerable period of time, and they can't really see any reason that they would increase interest rates over the next 3 years. Pretty much status quo for the RBA in terms of their actions and their commentary. I think I missed one there, so I will go back. So we also had the Institute of Supply Management Purchasing Managers Index, or PMI, for the USA. It came in at 57.5, and that was down from the previous 59.3. So this V-shaped recovery we've seen in the manufacturing sector in the USA starting to pull back a little bit. It was also behind expectations for a 58 print. So you can see expectations for a fall, and we've actually fallen greater than expectations. So whilst the manufacturing sector, they're still firmly in the growth side of the ledger. Anything above 50 indicates growth. That's great, but some of the momentum coming out as respondents reported, they're struggling with absentees, so people not coming to work, probably because they've got symptoms and they're doing the right thing and self-isolating. They are having to spend extra money in terms of sanitising and making adjustments for the COVID situation. I do note also that they're struggling to find workers. So it's starting to put a crimp on the growth in that sector. The employment index, interestingly, also fell quite sharply. So we've seen, 1.8 point fall in the overall index, but the employment index fell 4.8%, actually into contraction territory. That was disturbing. And new orders fell about 2.2%. So looking forward, I can see a further contraction. That is, it is concerning. It's concerning because a lot of the good work that's been done is starting to be unravelled by the current COVID situation over there. Okay, looking to the calendar, we will have Reserve Bank of Australia Governor Philip Lowe explaining himself, or at least the RBA actions or inactions from yesterday. We'll have some Australian GDP numbers out today. We're expected to return to growth and therefore end our technical recession. Keep an eye on that one, and I'll report on that for you tomorrow. Tonight in the USA, we do have the ADP non-farm employment change, which is a bit of a precursor to the official numbers coming out next week, and we will have Jerome Powell testifying before a Senate banking committee. You can catch all of our market news and updates at our market news section of the website. There's the link. Follow me or the Think Markets handles on Twitter. We do have a webinar coming up today at 12 o'clock Eastern Standard Time. You do need to register. You go to the same part of the website to do that, but you do need to register to participate, where you can ask me anything about any stocks you're interested in, and I'll do a fundamental and a quick technical for you. And then next week, also you need to register for our How to Value a Stock webinar. That's it for me this morning. The disclaimer before I leave you says that everything we've talked about is general advice. We are an Australian regulated broker and do have products that may see you lose more than your deposit. So read all these things very carefully. Give us a call or consult the website for further details. All the best for your trading until we catch up again. Bye-bye for now.